Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 17th June 2026. Reliance Jio Infocomm is days away from filing draft papers for its $4 billion IPO, potentially before Mukesh Ambani's AGM address. This offering aims to be one of India's largest, with funds going to Jio for expansion rather than existing shareholders. The move comes as India's primary market activity has slowed. Leading global private equity firms are in the running to acquire a substantial minority stake in Cloudnine, India's premier maternity and paediatric hospital chain. The deal is expected to value the company at approximately $1.2 billion. This strategic move will see existing investor True North exit, while other shareholders are likely to retain their positions. Ola Electric and its founder Bhavish Aggarwal have approached Sebi to settle allegations of disseminating false information to inflate stock prices. The company seeks an amicable closure to proceedings concerning misleading claims on service network expansion and sales performance following a regulator's notice. India may adopt a China-like strategy for its oil reserves. Refiners could be required to hold significantly more crude oil. This move aims to protect the nation from future supply shocks. The proposal is in its early stages. Refiners might face substantial costs for storage and oil purchases. This policy could bolster India's energy security. Amazon is in its most aggressive expansion phase in India, with plans to invest $35 billion by 2030 on top of the $40 billion already committed. The company is ramping up investments in e-commerce, AI, exports and quick commerce through Amazon Now, while targeting 100 cities and 1,000 micro-fulfillment centers. The Sebi has issued a circular allowing alternative investment funds or AIFs and venture capital funds to retain funds beyond fund life under specific circumstances. This addresses bottlenecks where funds cannot close because of locked up capital due to unfavorable circumstances such as disputes, tax claims, or ongoing wind-up costs. The circular, which comes into immediate effect, follows the regulator's notification in April to provide such flexibilities to AIFs. There are 3 conditions specified by the regulator for both AIFs and venture capital funds. Of at least one needs to be met for retaining funds beyond expiry. These include providing demonstrable receipt of litigation notice or demand by the funds that indicates a potential tax, regulatory or legal liability. Another condition that allows them to retain funds is to obtain at least 75% of the investors in terms of the value of their investment in the scheme due to anticipated liabilities from litigation or tax demand. The third one is through the substantiation of amounts retained for meeting residual winding up related operational expenses incurred in previous years as per the circular. The Reserve Bank of India has issued new master directions on authorization to operate a payment system. The directions, released on 15th June 2026, consolidate several existing circulars and guidelines into a single comprehensive framework, providing greater clarity and reducing compliance complexity for payment system operators or PSOs. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.